Hello, this is Justin Woodall, your trusted Athens real estate advisor. Today I want to talk to you about interest rates. So I'm sure you've heard the chatter, you've heard from your favorite lender, you've seen the Facebook post, whatever it is, that interest rates are down, interest rates are low, and they have been for a few months now due to COVID. They started going down this summer. And so how big of a deal is an interest rate if it drops 1%? Does it really make a big difference in my payment? Does it really make a big difference in how much I can borrow? And so I want to go through a few of those numbers and just explain to you how big of a deal interest rates really can be. And I truly believe that's part of the reason that we're seeing prices rise as we are, because the purchasing power is increasing. So let me just give you a few examples here, and I'll share this on the screen. So if you say your budget is, and I'm throwing out numbers here that do not include taxes and insurance. So when you meet with your lender or when you meet with your real estate agent and you're looking to buy a house, you've got to factor in taxes and insurance as part of your payment. These numbers I'm using today are only principal and interest. So again, don't take this to the bank. You need to go to your lender on this, but this is principal and interest payments only. So just say your budget is $1,500 per month. That's what you can afford. Now, if you buy a house at this, you're going to need to also add taxes and insurance to that $1,500. So your payment actually might be $1,900 if your principal and interest is $1,500. But if you buy a house for a payment of $1,500 per month at a 3% interest rate, you're looking at a purchasing power. You can take out a loan for $355,000 that's over a 360-year period. Now, if those rates climb to 4% for that same payment, you're looking at $314,000 is all you can afford, and for the same payment. And if prices go up to, or if rates go up to 5% where they were a few years ago, then you can borrow $279,000. So can you see the difference in those three scenarios, from 3% to 4% to 5%? And here's the other thing: if some people are getting rates as low as 2.75. So if you get, for the same payment at 2.75, you're at $367,000 in a loan value. So that's huge. It's almost $100,000 difference between 2.75% and 5%. Now let's say that, just to give a different scenario, say your budget's not quite that much. You can't afford that much per month. Let's say $1,000 per month. You can afford $1,000 P&I, principal and interest. Again, taxes and insurance will need to be added to that. Your total payment there, I'm ballparking, roughing it, probably $1,300 a month. That's a pretty affordable scenario for a lot of people. So just say you can afford $1,300 a month. At 3%, you can borrow $237,000. At 4%, you can borrow $209,000. And at 5%, it goes down to $186,000. So a year ago, when rates were 4%, you could borrow $209,000. And plus whatever your down payment, that was what you were limited to on what you could purchase. This year, if rates are at 3% or 2.75, you can borrow $237,000 to $245,000. So can you see how people can pay more for a house when interest rates are down, because they're looking at it from a budget standpoint? So I hope this has been helpful. And yes, rates do matter. If you've thought about buying a house, you can afford more. You can afford to buy more house now than you could a year ago, simply because rates are so much lower. Now, if rates go up higher, say you're going to wait a year and rates go higher next year, then you're going to be able to borrow less money for the same payment each month. And most people work on it from a monthly pay basis. They kind of know what they can afford each month. So keep that in mind. If you're on pause or you're waiting, don't wait until rates go back up. And of course, the economists are saying they're going to stay down a long time, and they may. And as long as they do, we're going to be fine. If they go down even more, I think we'll see prices rise, because that affordability will continue to rise. If they go up, then people are going to be able to afford to borrow less money, which is going to make it harder for them to purchase homes. So hope that's been helpful. If there's anything I can do for you, friend, family member, or coworker, let us know.